First of all, just a reaction to the very recent news that Trump is going to say anything that complies under the North American Trade Agreement will escape tariffs. I guess there seems to be a question mark on whether or not energy will fall into that. Do you have any indication either way?
We don't here at Kpler. Obviously, it is an open question where Trump is heading with these Canadian-Mexican tariffs. Our view from the start has been that the Trump administration will find an agreement with both of these countries in relatively quick order. However, I think that the uncertainty that's kind of being reflected in markets right now is certainly being reflected on my team as well.
Yeah.
A lot of uncertainty right now.
I got to say, the way that I'm reading it right now, and again, as you say, the devil might be in the details, and we know those details kind of get spun out over time. It does look like the 10% energy tariffs are going to stick around. We'll try and get that confirmed. Oil has been slipping under that $70 mark this week. I'm just wondering, how do you factor all of this into your look at the market and where it's going to go and what it's going to do?
I think it's important when we're thinking about the oil market that we kind of broaden the focus out. Of course, tariffs on Canadian oil will provide an uplift for, say, domestic gasoline and diesel prices in the mid-continent within the United States. But I think if we focus more broadly right now on the oil market, supply is outpacing demand. We have balances this year in surplus of about 180,000 barrels per day. Of course, we've seen OPEC decided to go ahead and ease its production cuts. We think that they will likely step back from that easing process in Q3 of this year. But again, just demand is falling under supply right now. And of course, when you think about Brent prices, we are taking a middle ground approach, basically arguing that Brent spot prices will trade in a range of between $70 and $75 per barrel this year. However, I do want to preface that by saying the risk is very much to the downside. If you look at oil price movement right now, it is definitely, testing the $68 to $69 per barrel technical level. If we break below that level, there is significant downside.
Okay, so let me break that up a little bit more, because I do want to ask you about OPEC. It's going to increase production in April. You're thinking it'll wind that down at the end of the year or closer to the end of the year. In that interim period, do you expect oil prices to drop even more?
We think that prices could find a little bit of support through the summer just because it's a higher demand season. So we do think that Brent could push to, say, 74, 75 per barrel in the summer period before coming under pressure again by the end of the year.
Okay, so that's something we do have to watch. You also are looking at Chinese consumption and that peaking next year. What built into that? How did you get to the belief that Chinese consumption will peak next year?
Yeah, the problem in China right now is one of economic imbalance. They have relied on investment-led growth for a very long time, and that growth model is very much coming under strain as they have to rely on exports to absorb all of that excess production that cannot be consumed at home. Obviously, the United States is looking to implement very aggressive import tariffs on Chinese goods, but places like Canada and Mexico, Europe, Brazil, India are all implementing import tariffs of their own as well. And so, again, as this investment-led growth model that China has relied upon continues to come under pressure, we think that will ultimately put pressure on Chinese clean product demand growth as well.
Let's go to Europe for a moment. I know that Germany has a big spending bill there. What's your forecast ahead as you look in the wider market in Europe?
Yeah, we came into this year expecting 1.2% GDP growth. We've kind of revised that back a little bit on a weakness in consumption expenditures to start the year. We still think growth finishes at 1%. That's a 20 basis point uptick from growth last year. Again, on the hopes that European consumption shows some improvement after relative weakness over the last couple of years. Of course, the spending in Germany does help the outlook over the longer term. Of course, we're going to have to see what the ECB continues to do. They cut rates today. We think we get another 50 to 75 bips of cuts through the end of the year. So again, a bit of an uptick in Europe, but still kind of struggling with the malaise that we've seen the last couple of years.
Did you look out farther for China? We talked about next year a little bit. I'm wondering what's down the road.
I think the longer term outlook for China is one of stagnation, especially into the 2030s. I think they're very much going to struggle to hit even a 2% growth rate come the 2030s, just given the fact that this transition from an investment to consumption-led economic growth model is very difficult and very painful.